mostly about Nebius.
Bring Ben back.
Here he
Here he
is.
is.
Good morning, lads. Good morning or good afternoon. Happy Friday.
Happy Friday,
Likewise,
Ben.
yeah.
How are we? We've been calling you the fortune teller, the future teller over here, Ben, because I know we had
Really?
it back and
What did I
forth.
predict?
You predicted the AI biology next frontier interface. It was only 2 days after we had that conversation that we had a guy come on and talk about their new human data center that they'd built.
Nuts. It's nuts.
So I just thought
His
that was a
backdrop
funny...
was a data center with, mechanical arms, doing all sorts of things.
It was
He gave us
crazy.
a very small.
I sent you the link. I linked you on
I saw.
our back and
It's
forth.
definitely the way things are headed.
Next frontier.
It's really exciting to see these things happening.
Really cool,
Yeah.
really cool. Well, look, we have a load of stuff to discuss with you. That isn't exactly on the biology side of things this time, more on financing, markets, what's happening. Where should we start? Maybe with the NVIDIA.
We can start with that. Let's do that.
Ben, break us down. What does this mean for the ecosystem? What are we seeing here? This number is gargantuan. Yeah, we'd love to hear it from you.
It's what's really cool is that these chips or these GPUs that NVIDIA makes, they're so unique, but so well used and fungible around the whole ecosystem, is that now large Wall Street banks can pull capital from institutions and investors and actually finance these GPUs for other neoclouds or businesses or sovereign countries, because it's a fungible asset. It's almost like the equivalent of like a Boeing airplane. Like a 747 with certain specs trades for a certain amount, and an NVIDIA, B200 Blackwell or a Vera Rubin system will trade for a certain amount. It's an asset,
Yeah.
as opposed to a Google TPU or a custom chip that Amazon makes for itself. It's only used for Amazon. Those are not as financeable. This
Yep.
creates like a liquid marketplace for compute as an asset.
And talk to us about like the scale of this. I mean, we had the CEO of Silicon Data on earlier, just mentioning the
Like
news
forward
of
contracts.
yeah, basically, which will help finance this boom, which is a great thing. But I think a lot of people were kind of shocked at the number, but then once you actually look a bit deeper into it, it's not. It's sort of rolled out a little bit slower. It's not as truly shocking. But yeah, what the scale of this? What do you think it means for the space?
It's a big scale, but at the same time, like the number isn't as big as you think it is. I think Goldman Sachs, the CEO, DJ Solomon, shout out to DJ Solomon, said there's $10 trillion of capital in money market funds and equities. Like it's looking for yield. So if they can give investors like a comfortable 7-8% return on financing GPUs, they'll do that, and it just adds more liquidity to the marketplace. But at the same time, it allows neoclouds like a Nebius or a CoreWeave or some of these other names, or Volta, that are coming out to create these AI factories to produce more intelligence. Because I think at the end of the day, what people need to understand, we're not going to be stopped using compute, and compute is almost like water or electricity. It's like it's a utility. Once that turns off, like you're stuck. If you can't like use your Claude or OpenAI, if you can't get your answers, then what are you going to do? So you do need your compute, and that's like a future utility that all these companies are racing to build.
I wanted to ask about this kind of like the physical asset side versus the kind of the companies that are providing like compute as a service type thing. What you touched on it right at the beginning. It's a very limited kind of physical product, but then also very widely used. Like, what does that mean for like the moat of a company like an NVIDIA? How does a market kind of react to when a company like that is just like, they are just providing such a good service to, the whole market? Like, how has that really ever happened before? Like, are there, can we kind of price this in and compare it to something else that's ever happened, or is this like such a unique situation?
It's unique because for the longest time, computer chips and computers were something you financed or leased for a few years, and
Yeah.
then once the upgrade cycle was kind of over, after you would basically recycle the computers because they were like you just couldn't use them anymore. But now with GPUs and compute, and obviously the CUDA layer, and what developers are doing across the world, like these systems are finding a useful life sometimes 6 years after introduction. So like the A100, which came out 6 years ago, is still in some data center like CoreWeave has, and people are using it to train some models into 2029. You can't say the same thing about a computer that you bought 10 years ago. Like no one's using that. Like you threw that away already. So, you know, one of the cool things of the NVIDIA product is that you get constant software updates and fine tuning and upgrades because of the CUDA software.
Yeah.
So from a customer perspective, you're getting a benefit. You're like, oh, if I buy this, it's not going to stay the same. It's actually maybe even going to get better over time. So I should use this. I should pay more. I should get this product.
Okay, interesting. And then let's talk about the neoclouds. We did have a bunch of questions about Nebius and their earnings and what's going on there. Can you just generally give us like a heat map on like, you know, why are neoclouds just rallying? You know, what is happening generally? And then yeah, we've got a bunch of questions about the kind of earnings specifically.
Yeah, I was actually at the Nebius had a inflection event in early June in San Francisco where the whole management team and some customers were there. So I got to meet Alexi and Ronan and a bunch of the engineers. Like these guys are, you know, they're all based out of Europe or Israel. Like they don't really have a US presence. No one really knows them. You see their advertisements everywhere, but they have the background of making these products for many years in Europe. So like they've built clouds and infrastructure by hand very well all these years, and they know what they're doing. The question is the market and US customers aren't really aware of who they are. But now if you go see what they're actually building the first, in my opinion, it's like an Amazon of pure NVIDIA GPUs, specifically for AI workloads, like full stack with the software, CPUs, everything. And you can buy bare metal or you can run instances like an AWS style on software, and they give it to you in every way and they serve it. And I think they optimize so much on cost and performance that they really are delivering value to their customers, and you can see it in their numbers. And you know, the funny thing is it did run up a lot and then run down because of obviously our friend Leopold was a big believer in the company, and obviously his fund had some issues that had to go away. And then our friend Michael Burry, famous from the movie The Big Short, and you know, calling the 2008 2009 great financial crisis for housing, was you know, went and told all of his subscribers and everybody on X that like, I'm short, like this company is a fraud and like it doesn't, you know, have this value. And I was like, whoa, this is not
It's crazy.
I don't think he understands like where we are and what he's doing. For you to really, you know, do these things, you just can't blindly look at numbers and stock charts. You have to really understand where the technology is heading, who's using these products, and their trajectory. And I think he led a lot of people blindly into the slaughterhouse, and they reported on the next day or that morning, and a 30% plus move on a company like that size to me demonstrates that there was a lot of short interest in the company, and a lot of people did lose money on, you know, blindly following that kind of information. Because we are compute constrained, and a company like Nebius doesn't have like long-term contracts. Like their contracts are all short, and they're selling compute at a high price because demand is so high. I mean, that's really what it is.
Yeah, they were. You know, there was speculation, of course, about, you know, or the narrative that Nebius was kind of spending its way to growth. But I think they had a negative EBITDA like last year. Now they've grown their way to a positive EBITDA, which is great. What does that what does that signal to the market? Obviously, Michael Burry shorting this obviously was a bad idea, and you can see that from the numbers. But what is that kind of shift of narrative and killing of that kind of narrative of spending their way to growth? CapEx is obviously high, but the demand is higher, and they're able to meet that demand.
Yes, I mean, CapEx inherently is always scary for companies because you want to see an ROI, but the CapEx that they're doing is aligned with customer demand, either Microsoft or Meta or other customers. And at the same time, from a construction and discipline standpoint, I think they even actually build their own flavor of hardware racks. And I think they were showing me that we designed a data center in a way where we know where the air is flowing, so we can save, a few bucks on cooling. So they're full stack all the way down from before they even pour the concrete. They know exactly where to shave to make these things work. I think they're doing a data center in Finland and then London, somewhere in London, and I think they're breaking down somewhere in France. They're just not understood. But like once you sit down and like you really meet the engineers and the people behind the team, you're like, wow, like these guys really know their stuff. I like this company.
Yeah, and they have I saw they had like a pipeline of like $9 billion dollars, which is insane. And obviously like customers, Meta, Microsoft, and everyone else in between.
Yeah, we were lucky enough to have Ronan, the CBO and co-founder on. I think it was last earnings call actually.
Yeah,
and they're a great team. Super lucky to have a connection to them. There was something that you mentioned there that was really interesting on the topic just beforehand in terms of like. Michael Burry's position, the short, obviously has not paid off. He's led, everyone that's subscribing to his Substack, unfortunately, as you say, to a slaughter. But the part you mentioned around like his pricing mechanism is looking at the numbers. It's just the numbers alone, not the momentum, the direction. Where is the new epicenter? Where are things heading in general? And I think that's really interesting. Like, how do you feel? In that regard, do you feel that like his way of pricing things, like basic numbers, is essentially over for these particular businesses? The one that it looks like it could be a huge winner in the future. Would love to get your take.
Yeah, we're in a new era of business creation and valuation and business growth. We have companies like Anthropic that maybe might exit the year at $100 million at ARR when they started this, maybe in January at 10. I mean,
really, was it that low? I thought it was like they're currently at 47. I thought it was.
No, I think Anthropic is like 70, 80 right now.
Okay,
OpenAI is
but they started
like
at 10 this year.
Yes.
Wow, okay, I didn't know that. I thought they started at 40. That's insane. Wow.
Yeah, so this is like a very. The thing is with AI and the things that everyone's working on and the people that you speak to, things are moving at exponential rates. That's the challenge. And if you're in the mindset of like looking at a spreadsheet and you're a linear thinker, it's hard to grasp or wrap your head around how are these things growing so fast? This doesn't make any sense. This is a bubble. Like this is circular financing. This is wrong, and you get in your way, and if you don't have an open mind to kind of see like, how does this stuff really work? Why is it growing so fast? Why is demand for compute exponential? What are these models doing? Where are these models being served? What are the costs? Like you have to kind of have a holistic view of all these things together to really understand how these things work. And if you don't, and you're kind of old school, and you're like, this is the price to what the value of its earnings or future cash flows is too high, and it doesn't work for me, then you're gonna like run into these issues. Like you have to be able to think in exponentials, and that's like a skill in itself for a lot of investors that don't have.
Following on to that as well, like connected to it, where do you think we've seen like price estimates for Nebius shoot up after the earnings beat? Where do you think these type of things can end up? Like, can these be trillion-dollar companies in the future? What do you think that time span can look like for a company like a Nebius or a CoreWeave?
Yeah, I mean, the goal of the neocloud from an NVIDIA perspective is we made these chips. They are expensive, but they are the best. But at the same time, I know you want to go try to make your own. You're trying to save some money. You want to make an Amazon Basics Trainium chip. Here, make it, but you're going to be left behind. And then if you don't do it, I'm going to find someone else who's going to buy my chips and make a true AI first cloud. And that was like the birth of Nebius or CoreWeave or IREN. So you see, there's all these companies chasing those customers that are looking for compute, where a lot of these larger, well-established clouds like Google or Microsoft, Azure, or Amazon were dragging their feet from a corporate perspective, saying, hey, these things are too expensive. Like, why should we lock ourselves into this roadmap? Let's build our own. Let's arbitrage on the cost. We have a deeper balance sheet. We can go to Wall Street and we're Amazon or Google and raise money at 4 or 5% for 100 years because we're Google. But if you're a Nebius or a CoreWeave, you can't do that. You haven't been in business that long. You don't have that crazy cash flow business. Sure. That's why you had to bring all these Wall Street banks from Goldman Sachs all the way down to Brookfield. Be like, you know what? We'll finance the GPUs. We'll bring the investors. You go build the data centers. We got this. Giving access to that capital levels the playing field for these companies to bring more of these NVIDIA GPUs to the market.
Yeah. Just touching on that, I know we're 5 minutes over. Is it all right if we ask another question?
Yeah, no problem.
Okay, good. So we covered a switch up in plan from Mistral, a home model provider in European soil. I wanted to ask, they were building their open weight model. That was the thing that they were focused on, but it seems like a shift in plan as of a few days ago into the infrastructure and the distribution layer. Creating these kind of like long-term contracts with the likes of ASML and then kind of raising the money off that. Instead of raising the money off their balance sheet, then raising the money off those longer-term contracts. What do you think what do you think that shift is? I don't know how much kind of insight you have into the Mistral plan and what they should be doing and what they are doing now, but can you give us any insight into like what do you think a model provider like a Mistral should be kind of focusing on and could be focusing on to kind of get an edge in this race? Because they've clearly just looked at the model layer and thought we're kind of way behind. Let's just sack this off and go for the infrastructure layer and find the wedge there.
Yeah, they've definitely lost the race in the model layer versus America, and obviously models out of China, which are just it comes down to talent and compute, and it's basically America and China right now with that.
Yeah.
And if you look to where the value accrues, at some point, you could say there'll be a stasis in the models, and you can use any open source model or whatever it is. Like, why would I get it? Why would I pay for a Frontier Mistral model, which is even that good? So what's the point? So right now, taking a look back, what's France or what's Europe good at? They're good at some high tech manufacturing, semiconductors, obviously ASML, and then France is actually really good at power. I mean, there's a lot of nuclear in France and in parts of Europe. Like, power and energy is compute. So if they can kind of go up the stack to energy and actual semiconductors or fabrication or that infrastructure, there's value there that they can hopefully capture. I mean, that's where they have to go to kind of make it work, because the model at this point is like, you can get it anywhere that's better than what they've made, unfortunately.
Yeah. Well, no, I think we were covering how smart the move was, and that we're bullish on the fact that it's a it's a very big plan and almost delusional, but I think that's what a continent like Europe needs, is that delusion to get to that new frontier in that new plan. Ben, it's always so useful to talk to you. Super interesting. Thanks again for joining us. Second week on the trot.
Welcome back.
We appreciate
Anytime.
Cheers.
Anytime.
Cheers.
Good stuff. See you
Good
soon.
day.
Ciao, Ben.
Legend.
Love